Hello, my name is Aliya, and I am here to talk to you about credit card debt. I currently work in the world of finance as a loan officer, helping individuals with meet their financial goals when it comes to refinancing debt and a multitude of things. But I just found out that in this job, I've been doing it for about 2 years now, but in this job, going on 2 years. It hasn't been quite 2 years, but in this job, I found a passion. I believe that God has sent me here to help people when it comes to this type of information, because there's not a lot of resources in our community that's just like in your face, and we kind of let credit card and debt and loans and interest rates just go over our head because it's not something that's understood or really even talked about. So I just want to be here as a vessel. I believe God placed me here to talk to you about this and just help you and you help me, because eventually I want to become a financial advisor. That's something that I've been working towards, and I just love sharing the information and just helping people out when it comes to their finances and just decisions and choices. So a little background story about me. I went to Westchester and graduated from Westchester University. I did health science and nutrition, found my way to finances, and I love it, and I want to keep on growing and keep on impacting the community and adding value when it comes to this type of information. So I'm going to start off with a story just to kind of break it in for credit card debt. So you're young, you're 18 years old, you're on campus, and it's move-in day, right? You see a bunch of different tables, and they're saying, hey, I'll give you $1,000. Sign up right now, I'll give you $1,000. You get a cash advance right now. You can take it right over to the cafeteria, get a cash advance, 0% for the rest of the year, no interest payments, boom. And this happens, and you say, oh, great, all right, 2 seconds, I'll sign up. Your parents are no longer there. You're trusting in the individual, the salesperson, so you sign up. All right, 0 payments, no interest to the end of the year. You come home November, and you get correspondence from Capital One. They say, hey, 0%, no payments to the end of the year, another $1,000. And you say, oh my gosh, I'm blessed. So you take it, you get it. January comes, and you have your bill comes for the two. So for Capital One, for the campus card, you have 1,000, and you maxed it out, right? And then you have Capital One, you have 1,000, and you also max that out. Now it was 0% for until the end of the year. So now January comes, they want their bill. You find out the campus card has a 30% interest rate, variable. Capital One, also 30% variable, right? So when you get your bill, you got 30% from both of those places. When you get your bill, the campus card says 1,025. That's an ugly 5. Let me fix that. And the comma is in the wrong spot. Sorry. So 1,025. Now, how could your balance be higher than the line? So I've only spent $1,000, but my balance is 125. How could that be? You're confused, right? Do you get your Capital One? Same thing, same interest rate, same month, right? That's also 125. So now you are $50 over the limit. Okay, so I'm going to explain that to you and how that works. When it comes to credit card, there are 2 parts. One part being the principal. Second part being the interest. The principal is the amount you actually spent. That's the money that's the line they gave you. That's the amount that you're owed. The interest is the additional finance charges that the company charges you to borrow their funds. So the principal on those credit cards and the interest is what your bill is. So both those bills combined, or we're just going to stick with one credit card. The campus card, your bill is $1,025, but your minimum payment is $20. That's where people get stuck. That's where you get stuck, and that's where you get into debt. So when you have a multitude of credit cards, so that person, this 18-year-old that we're talking about here, he or she has that one campus card and that Capital One card, and they're paying the minimum payment of $20, which is lower than the principal and the interest payment combined. So when you get that credit card next month and your bill is still more, it looks like the $20 didn't even affect it, it's because the interest charges, and that interest rate is extremely high. So how they calculate interest charges is that, say that line was $1,000, right, times 0.3. That's $300. Okay? $300 for the year divided by 12 is $25. Now I'm just using easy numbers here so you can see, but let you pay that minimum payment, you're going to be paying that $1,000, 3 times over. It's going to take you longer to pay down your principal with a minimum payment. So these companies keep the minimum payment so low. Minimum payment was $20, so that you keep on paying them. But you want to hit the principal. The principal was that $1,000, and your interest accrued was $25. Your minimum payment was $20. So even when you pay it, it's still going to be over the line, the original line, which is the principal, which you actually spent. And some credit card companies, they'll increase your line. But I'm just talking about if it were to stay at the 1,000. And it also has negative implications, because that could be bad for your credit score, your credit report, especially if you only have those 2 cards and you max them both out. So you stay in debt when you max out your cards and you pay that minimum payment, because the interest accrued will continuously accrue. It will continuously accrue. You're going to be paying it. And I know people, they get frustrated. They say, I've been making my payments for 6 months and it's just not going down. Capital One is a big culprit of this. They have an amazing business plan. They're a good one. They'll get you and you'll be paying and you won't see that balance go down. So I'm here to tell you, it's principal and interest. So what you need to do is you need to contact your credit card company, right? Find out what the principal is, how much you actually owe. Add the interest, so on your balance. So if say your interest is, say your balance. Let me give you an example real quick. Say that your balance is $1,050, right? And the $50 is interest charges. And your minimum payment is $20. To hit that principal, you want to pay $50 to get to 1,000 plus that 20, which is $70, to get that balance to go down. That's how you want to do it. You want to keep on trying to tackle that principal so that you can pay less and less interest. You want to stay under you want to stay under the line. You never want to max your credit cards out. And that's how people stay in credit card debt, because they max their credit cards out and they have these extremely high interest rates and they can't figure out how they're calculated, so that they won't have to continuously pay over and over and over again, and it just won't go down. So I want to use this platform to talk about a lot of things when it comes to finances. I want to talk about debt to income. I want to talk about collections. I want to get creative with you and break down some barriers that we don't really talk about in our community. Because I feel like this could be a blessing to somebody who's going through something with their credit cards and they can't manage to get their debt down. I mean, there's many ways to get your debt down. We'll talk about refinancing debt and all those good things. But credit cards have good benefits. They have points. They're not bad. You just want to be able to know how to use them responsibly and have available credit. You want to keep your credit cards under 30%, the amount that you're using. You want to keep your available credit high. So you want unavailable credit, you want to keep it under 30%. How much credit you're using out of that credit card. That's a golden rule. Most people use that. Because when you go to other lenders to lend for mortgages or loans or even other credit cards, they want to see that you're not over leveraging and you're not maxing out your cards. You want to have a good payment history. Again, that's something that we're going to talk about. But this is just the first video. I just want to let you know that this is a passion of mine. I do love talking about finances and helping people understand different types of debts that aren't talked about or discussed, and we feel like we don't have the resources. And I just want to be a vessel. I was up last night with God talking, and I was excited because I was just like, Lord, I'm gonna do this. Like, I feel like He's using me. He's helping me touch somebody out there. So if this video helped you in any way, I implore you, please, to share it, like, subscribe, leave comments. I'm going to be talking about a bunch of things when it comes to financial stability, because it just brings me so much joy. And I really just want to help and add value to my people and just to anybody out there who may need this, who may need stuff broken down to them. And right now, it's just me right now, so I'm just in here. No special effects right now, but I'm excited and I'm ready to really explain and show and just be a vessel and show you how to work your finances for free. Just be here to help. So again, thank you for taking the time to watch my video today. And I'm gonna pray for you guys, and you guys pray for me during this pandemic. But we know our God is great, and we will be okay. In Jesus' name, thank you so much. Bye.